Big drop in the market on Friday. We're going to break down in this video exactly what happened and what it means for your portfolio going forward. We're going to talk about the economic news, the fear and greed index, the interest rates, and then we're going to jump into the top trades for Monday's open and all of next week. And there's some good ones. Should be a fun video for you here today. I appreciate you all for being here. One thing I ask, one thing only, smash that like button down below for me. It really helps out the channel, so I appreciate it. Thank you very much. And you're certainly welcome to subscribe as well. We're at an all-time high for subscribers, and let's jump into it. Last week, the stock market experienced extreme volatility and had a sharp sell-off on Friday. The S&P fell 1.6% and the NASDAQ 2.2%, each marking their worst weekly performance since April. The downturn was triggered by a combination of weaker than expected jobs data and the announcement of new tariffs by President Trump on 68 countries and the European Union. Major tech stocks, several banking giants, and industrial leaders were among the hardest hit. So do I think that this downturn in the market on Friday is going to continue over the next couple of months? No, I don't think so. Interest rate cuts are coming real soon, and earnings are just too strong. The companies that are coming out with earnings, and there's more this week, are just killing it. So I see this as a buy the dip opportunity. Let's go ahead and jump into some of the top trades that took a dip on Friday, and they're ready to move up significantly over the next week, 2 weeks, and the rest of this year, as they're all killer, super strong stocks. All right, guys, look at this stock chart from last week. This is the 5-day chart, Monday through Friday. And you can see right here on Friday, when the market opened, big drop. We had some numbers that came out. We're going to jump into that. And then the market was down all day on Friday, so big drop. Let's look at the actual numbers on the sector spiders. This is the 5-day different sectors performance. And you can see for the whole week, materials was down big, 6%. Consumer discretionary, almost 4%, as well as financials and healthcare. And if we go out and look year to date, we're still up on everything except healthcare is down. And I've got a healthcare stock in here. I've actually got a couple that I'm real strong on, one in particular. And then consumer discretionary is still down. We have the fear and greed index due to the drop on Friday and the numbers that came out down at 50. So now's a good time to put some money to work, I think, and put some of the cash to work. Interest rates were expecting a cut quarter point in September. Just in July, we left rates the same, and we've got Trump's back and forth with Powell. But there is an 80% chance of a cut in September. That should happen. And then a quarter point in October, December, and then you can see the probabilities there. 46% chance of a quarter point in December, and then staying there January and April, and then the next cut maybe April of next year. But these will change over time, but there's more rate cuts coming until we get all the way down to that 3 to 3.25% near the end of next year. And as far as economic data that came out or that's coming out, is this week? Let's see. Okay, this is last week. And here, hang on. What do we got? Last week's. The big thing was the unemployment. Okay, right here. U.S. unemployment report on Friday. 73,000 jobs. 100,000 were expected. So underperformance there, and that's the big reason for the market drop. And this week, don't think we have too much. I think we've got, let's see, Friday, nothing. Thursday, we've got some jobless claims. And, yeah, that's about it. So let's go ahead and jump into the trades on the trade platform. And the first one that I have that I'm covering, I'm not going to cover all these that I have, but just the ones that I think are great buys right now and take advantage of the dip last week. And these are great long-term stock buys for me. Let me know in the comments if you disagree with any of these, but or if you like them. Any comment helps. It really helps out the channel, so appreciate it. I've got 3 leaps options on an Archer Aviation, and you can see it's trending up. To explain my the way that I work and is I look at the Bollinger Bands. We've got those in white. Right now, near the bottom, like the stock is right now at 9.65, is indicating in the short term that the stock is oversold. So good buying opportunity. It's likely to bounce up. And if it's over near the top of that Bollinger Band, then it's oversold or overbought, and it's likely to drop. And you can see once it hit that, it dropped. I've got the green and the reds. The green is the 50-day moving average. We like to see that breaking up over the 200-day, which is in red. So this is a great chart for Archer. It's trending up, and we had a short-term pullback. So great time to invest. Let me show you one other thing. I look at a lot of different factors. Everybody's got their way of trading. I kind of take everybody's, and I have my own system. Actually, I have an options trading course. Download the free options workshop. Check that out, and it's in the link below. And there's a paid course as well that shows you exactly how I do it. But I look at the trending, the 50-day over the 200, and you can see right here, I've got it in green, above. Support and resistance levels, oversold. We just showed on the Bollinger Band. The long-term fear and greed index is 50, so it's neutral, so good time to invest. That's why it's in green. The 12-month range was 2 to 14, and it's trading at 9 right now. So that's, there's still room to move. And then I look at the earnings history over the last 3 quarters, and there was a buy, a miss, and then a beat. Not bad. And then I've got my notes on the specific stock, and you can see this is a EV takeoff and landing company, and the electric vehicle takeoff and landing deliveries and things like that. There's a huge market, 35% annual growth through 2030, urban mobility and defense. They're raising cash. So at this stage, it's premature. It's tough because they're spending so much on R&D and growing. So it's tough to evaluate this stock, but huge growth going forward. It fell 15% last week, but it's still up 15% year to date. So I just wanted to kind of show you guys the way that I evaluate it, different stocks. So, all right, we won't spend that much on each one. Adobe is another one that is a huge buy. These guys, big company, solid. They're getting hurt right now. Investor sentiment, it's down to 347 if you look at the chart. And trending down, but you know what? I'm not worried about these guys at all. Stock price is 347. It's going to come up. It's just a matter of time. It's way oversold. The PE is 15. The PEG is 1.1, the price to earnings to growth. So they've got 12% growth, solid, every quarter. They beat every quarter. I don't know how many quarters they've beat in a row, but it's huge. And they grow double-digit growth, net income growth, net income margin is huge, 37%, and the PE is very attractive right now. So I like these guys. Fig had a Figma, ticker symbol Fig, had an IPO last week, and it's the hype stock now, and it's in this sector, but they're small compared to Adobe. They've got a long way to go. I like the CEO on at Fig. So I'll watch that, but I would never get in right now. I'll wait for a big pullback on that. But I love Adobe long term. It's just going to continue to beat earnings going forward. So you can see I've got a put credit spread on. So if you look at the trade page, this is a Tasty Trade platform. You can go here to the curve mode and analysis, and then you can see the profit zone. As long as we stay above 370, we're down 350. So I'm going to have to roll most likely unless it recovers quickly. Once we come up near 15 to 20 days, then I'll look to roll to the next month. And that way I don't really take a hit, and I can likely roll for a profit. But I have a feeling it's going to move up. It could be profitable before the expiration, definitely. All right, AMD is the next one. It's actually had a big move up. You can see right here. This is the 12-month, 1-year chart, 1-day chart. And you can see the 50-day moving above the 200. It's a little overvalued, but I'm not. I'm staying long AMD and just playing poor man's covered calls. So what a poor man's covered call is a leap option, and then I sell a short-term call option against it and collect monthly premium. So I've been doing that on AMD, killing it. They are growing extremely fast. They've got MI 350 out now, that MI 400 coming out shortly. They've got earnings on August 5th, and their guidance they're going to beat, I believe. And then their guidance going forward, I think, is going to be great too with the MI 350 and MI 400. So to me, it's just on its way to 200 and above going forward. So I'm going to stay long AMD and keep doing my poor man's covered calls. I did close one out last week with the downturn and on Friday, but I still left my 185, 190 on just because the 190's got $20 upside that I can still profit on. And you can see the premium left in the short calls. So AMD's a great one. Amazon came out, crushed earnings, and then had the pullback on Friday. Huge buying opportunity. You've got the 50 above the 200. It came back towards the 200. These guys are just a cash machine. They're a giant. So I'm staying long Amazon. That's a huge buy right now. ASML, semiconductor equipment stock. They actually the chart I like. It did have a triple bottom. Yeah, kind of a triple bottom here. But these guys are set to grow. Continue growing, and it's got a 25 PE, 1.4 PEG, 13% growth rate, so that they're killing it. There's funding coming from the government for these manufacturers and manufacturing in the U.S. So these guys are kind of like picks and shovels during the gold rush. These are the guys. There's $1 trillion investment in new semiconductor plants through the end of the decade, and ASML has 90% share of the global lithography equipment market. So it puts them in a solid position moving forward, and they're going to do great. They've beat earnings the last 3 times I know, and I think going back, they've beat earnings for a long time. My target price is in the 900s. It's 920, and we're at 689 right now. So. And I've got put credit spread. So you can go to that curve mode and you can see the profit zone. But I'll just roll once we get down to 15 to 20 days. But I have a feeling it's going to jump up and be profitable this month. Big Bear AI leaps options with calls sold against it. Had that pullback, so another opportunity. But these guys, I love Big Bear AI, small company, powerhouse delivering advanced analytics and cyber solutions, digital identity. They're kind of like the next Palantir. I did a video on these guys and covered them in detail, but they have advanced analytics, cyber solutions, and digital identity technology. So they've got commercial and defense focus, just like Palantir. Duolingo. So this is up. Sorry about that. Let's go back. Oh, let's look at the chart for Duolingo. So you can see trending up and then a pullback recently. And we've got the 50 coming back to the 200. A lot of times the 50, when it does this and it's trending up, it'll bounce off and move back up. But you can see very oversold right now. So good time to buy as long as you like the stock long term, which I definitely do. And I'm going to give you the reasons why right here. And I missed CRM. Shoot. But CRM is another one, Salesforce, that I really like. But trading at 338 right now. It's a strong balance sheet. They've got 32% growth, 70% gross margins, and recurring revenue model. It's a language learning platform, and they've got subscription revenue coming in. So it's a solid month after month. They're going to continue to collect that revenue. And they do have a high PE, but again, they're in the growth stage right now, and beautiful chart, and their growth is big. Let's go back to CRM. These guys, I don't know why it's been down, but I'm just waiting on CRM. I've got 2 put spreads, and you can look at that chart. Down, down, big buying opportunity. This is like a triple bottom, and my target for CRM, let's see. I've got a target for CRM up in 360, and it's trading at 250. And the 12-month range has been up to, from 212 to 369, PE of 22, 90% margins, 30% net margins. It's a no-brainer. There, it was down due to competition and SAP and Microsoft. So Oracle provides the SAP software, and these are CRM, customer relationship management software, and Microsoft Dynamics 365 is also a CRM solution. I've used them all, and by far Salesforce is the best. So to me, it's a no-brainer, but they've had a big move down, so I'm just DCAing in, and I'll add more as if it moves down, but it's gonna move up at some point, and they're really utilizing AI. CRM is. All right, so let's see what we've got next. I'm going to try to scoot through these. We did Duo L and GitLab. GitLab's been on the list from last week. I've got 3 leaps. I closed out my short calls. I had 3 short calls last week, but with that down move, I just went ahead and closed them out for profits. Now I'll just wait and be long. That's the beauty of trading both sides of the market with leaps and selling calls against it for the poor man's covered call strategy. It's just like a covered call. And you can see the big drop last week, and we're down at the bottom of that Bollinger Band. And what happens when Trump talks tariffs? It's just a couple of days later, and then there's some good news that comes out, and the market screams back up. So I'm confident that's going to happen again, just due to the strong earnings and these tariff deals getting done, and then interest rate cuts coming. So to me, huge opportunity, but love GitLab going forward. Eli Lilly, so a drug stock. Same. Here we go. We're in the profit zone already, 760, and it's had a big down move. You can see it's been kind of consolidation mode, but huge pipeline with Eli Lilly. And let me see some of my notes here. I can't remember every one of these stocks. That's why I keep a chart and notes, and I show that in my training. But triple bottom, 735 to 920 is the technical support. It's oversold. PEG ratio of 1.1. 675 to 975 was the 12-month range. So there's huge upside over the last 12 months. They've got strong diabetes drugs, weight management, huge pipeline. David Ricks is a great CEO, and they've got heart and Alzheimer's as well coming up, blood pressure. They've got a drug to suppress liquor for alcoholism, dementia. So Eli Lilly is a super safe bet, and it's going to move up a lot, in my opinion, going forward. But let me know in the comments below what you think. Mara, I'm going to put a trade on. I'm going to do a poor man's covered call. I've got 2 leaps on. I closed out the short calls last week on the down move, but Mara is not just – a lot of people think that Mara is just a crypto stock because they own a lot of Bitcoin, but it's not. It is a Bitcoin miner, and it's tied to Bitcoin, but they have their own energy and their own land. So they mine, and they own a ton of Bitcoin. I'll have to put that in my notes exactly how much they own. But it's an infrastructure play, and Wall Street is using the wrong model to evaluate Maros. So it's a huge opportunity, and it scales with AI as these AI companies and the Amazons and the Microsofts, all these companies do well. It's just going to scale and do great. They've got on Yahoo Finance 187% expected growth next year, which is unbelievable. And if you look at that chart, beautiful chart, kind of consolidating. The 50's just above the 200, and it went back to the oversold mode. So great buying opportunity. Poor man's covered call is how I'm playing that one right now. All right, let's see. Going forward, what's the next one? We've got, I think Meta's great right now. I'm not going to cover that one. But let's see. Marvell, I believe, is the next one. It's a semiconductor company specializing in high performance chips for AI, and it's a screamer. The chart's beautiful for Marvell. You can see it just breaking out the 50 above the 200, getting ready to break out. My target for Marvell is way up there as well. It's trading at 74. My target is 105. They beat earnings the last 3 consecutive quarters. The analysts have it rated as a strong buy. PE ratio of 25, PEG of 1.5, and 27% growth rate. So it's kind of a no-brainer stock for me. The way I'm trading it is, leaps. I've got 3 leaps, and then the way that leaps work is you buy a deep in the money leaps option. So if you go to the trade page, you can go to the table mode. I'm out here in March. Normally I'd go a year out. So if you went to June, you could go out here, and the 70 call option we're buying, you could click on that 1800, and 1785 is the mid price. So one leaps option contract controls 100 shares of stock. So that's really, you multiply it times 100, it's $1,785. But to buy and control 100 shares of stock, you're controlling 100 shares with $1,785. If you bought 100 shares, it would be $74.45 times 100, or $7,445. So typically it's about 20% of the cost if you go a year out to control those. And then at the same time, you can sell a short-term call against it. You can sell the 80 right here and collect 465. You do that every month. You do it for 3 months, 4 months, under 6 months, and you pay for the cost of the option contract. So that's what I love about it. If you go to the curve mode, you can see, just like owning the stock, as the stock price moves up, your profit moves up as well. So 1785, if it gets up to 105, my target, the P&L expiration would be $7,582. That's not just a 100 times, it's what is that? 300 times profit. So Marvell's a screamer for me right now. MicroStrategy. No, I'm not. MicroStrategy. I'm gonna look at that as well. I'm long. It's trending up, and it had a pullback. So great opportunity. I've got a put credit spread. Micron's great right now as well. I've got a poor man's covered call, and you can see the chart here moving up, but then it had a pullback last week on Friday, the end of the week, and screaming buy right now. I think Micron's going to do well with the data center build out and AI. It's got to have huge amounts of data. They have memory and storage, so SSDs. And again, you can do that leaps and collect monthly premium against it and pay it off and control 100 shares of stock for free in less than 6 months. So Micron is a great one. I like ServiceNow right now. If we look down here, I've got some put credit spreads on. You can see that chart down below. So take a look at ServiceNow, great CEO. They beat every quarter as well. Palo Alto Networks, cybersecurity, down. I don't know why so much. I mean, there's huge spending. They talk about it on the news with the administration, so it's just a matter of time. And these guys are the best. There's CrowdStrike as well, but Palo Alto is the clear leader to me. And it dropped back down to 172. And high IV rank, so that's a good time to sell premium. So I sell put credit spreads, and that's probably what I've got on because it's an expensive stock. So I've got 3 sets of put credit spreads in Palo Alto. If you look, you can see if we go down to 170. Actually, we're in the profit zone right now because I've got 3 on. As it moved down, I just threw on another put credit spread, and it kept me in the profit zone. But if we get back up to 195, 200, any good news next week, then I make over $1,000 on it. You can see the premium that we've got left in it. PayPal, everything had that big move down on Friday, so I think PayPal is a buy for me. Rivian is a buy for me as well. They've got some new cars coming out in 2026, and you can see that pullback. You can see it kind of trending lower. But every time higher highs, it's trending up over time. But great time to buy in right now. Most likely, it's going to shoot up just like the chart shows. So I love the chart on Rivian as well. And let's move over here. Let me look what I've got. I've only got a couple left, guys, so I appreciate you hanging with me. Tempest AI. So this is a healthcare. It's in that healthcare sector. I've got leaps. I closed out my call. Anytime I'm doing a leaps, I'm always going to sell a short call against it when I put the trade on. So I'll do a poor man's covered call. That reduces your cost basis. However, any down move, and we don't typically know when that's coming, but any down move, then I can close out that call and wait. I'm fine with holding the leaps and being long with where it's at right now. And you can see that chart. So love these guys. Let me see what I've got in my notes. Oh, sorry about that. My notes on Tempest AI. You know what? I don't have too much. It's a healthcare. Don't have too much on it, but let's look right here on the Tasty Trade platform. You can go to financials right here. You can see income statement moving up, a balance sheet strong as well. I bet you the profit is good. I've looked at this before, so I know it is. Yeah, 57% margins. About Tempest AI, technology company, advanced precision medicine through application of AI in healthcare. So healthcare is a great sector right now with it being down, and then AI, about that. So to me, Tempest is great moving forward. And I think that's about it, guys. All right, guys, be sure and download the free options workshop in the link below. Like and subscribe. Let me know in the comments below which stock you like that we covered and the specific breakdown and strategy that you're utilizing. If you like this video, watch this next one.